Good morning, everyone. This is Anne Marie. Today is February the 5th. It is a Tuesday, and this is another Gold Membership Update event. We are doing a special one today because of the unusual things that happened yesterday. We got stopped out of three things, which is extremely odd. And so when odd things happen, we have to think about, well, why is it that that happened? And that usually we can attest to as shifts in market current. Here's what we did. We gapped up on Friday. We gapped down on Monday. It looks like we're going to gap up again today. So we have got to adjust. For the next 24 hours, we will not be putting out any new ones because we'd like to find out if the market is just in a very sideways choppy action. And as you recall, when I first started talking about the gold membership, if there are not very good opportunities for us to take, we will not take them. Two things we want to think about. Risk management. When you come into a position and you take a look at something, now in the grand scheme, if I took a look at, the worst loss here is Walmart. We're going to talk about that for a minute. Loss of $2.95. When we take a look at something like that out of our position, maybe in the grand scheme, it's not that big, but it is a 62% loss off of the exposure that we had ourselves open to. When you are looking at your position, you must think to yourself, what if the wheels come completely off the bus? If you can't stomach the loss of the entire exposure amount, I would recommend that you back down on the size of your position. Now, that might seem a little bit extreme, but it is certainly what I have done over the years, and it really does keep me from getting in trouble. All right, so now that being said, let's take a look at why Walmart particularly was such a grievous loss. One, it gapped up on Friday and triggered at a high price. Two, it gapped down on Monday and triggered out at a low price. So what that actually did was give us the worst possible fills at market, and both of them were due to gaps. Now, when gaps appear in the market, we know something's up, and we're gapping down, and we're gapping up, and we're gapping down, and we're gapping up. For automatic rules, that makes trading a little bit more difficult. So there are two rules that I would like to institute. From here, I'd like for you to pay attention to. When we set these orders up before the open, you need to take a look at the pre-market. If the pre-market is gapping up and you've got a position that's long, that's all set to go, I would recommend pulling that position off and waiting until after 9:30, 9:45 maybe, whatever it is, between 9:30 and 9:45, and then setting the order in with a time condition, right? Now, for the gap down, the time condition works perfectly because what it does is give us a little bit more time for the stock to catch up and fill its gap before, if we are getting out of an order, right? We would want to use this on the getting outside. Don't let this order come about until this time goes into effect. So when you're getting out, you're going to have that. Now I'm going to do another video with all the pieces so it makes sense. But that's what we have to do. We have to initiate the time condition event into the trade. One side has to be manual. Listen, if you're gapping up and you're in a long position, know you're going to get a bad fill. If you don't care about that, leave it alone. If you do care about it, pull the order. You don't have to be so eager to get into the trade that you're going to risk gapping up and getting filled at a bad price. That's going to hugely expose your risk and totally unnecessary. Don't do it. The second thing is when you're gapping down and you've got an order that looks like it's going to fill at market because it's below your support level, you need to get in there and insert the time condition. All right, so I'm going to show you how to do that. Ultimately, that's going to be a very, very good thing for you. Now, if you don't like the fact that you have to go in there and make adjustments because of the gaps, all in all, it's, do you want to minimize your risk and maximize your reward event? Then there are things that you're going to have to do that are kind of cumbersome. And for automatic trading, that's the one thing that we have to guard against. All right? So that's it. We are going to take that 24-hour hold, take a look at the market. Again, looks like we're gapping up this morning, and so things will shift around. We'll see what's going on. Still feel pretty good about Juniper. A lot of good things going on there. And we'll just keep watching. So look for the next video. It's going to show us a little bit about adding the time condition to our events. And I will talk to you again tomorrow. Look for another update.